Hello, trade pros, and good morning, and welcome to our morning market update. My hair is a little crazy, and yeah, this one's gonna be. If you've noticed me kind of going a little bit quicker through things, it's gonna be a shorter one. I'm not actually trading today. I'm taking a day off to be with the family and my kids, and so let's get into it though. I hope you've all been well. I got a lot for you to cover. Let's jump into it. So markets rebound. Tech is leading the way again this morning. Okay, global equities are firmer across the board. I won't quote them all for you because the quote's likely changed. All right, the dollar's firmer. The gold is steady near 41.25. So gold's kind of back up above 4,000, above 4,100 as well. And sentiment is improving after yesterday's really nasty ADP data showing a really bad labor market. All right, and also the shutdown resolution is advancing. We'll talk a little bit about that as well. Okay. Donald Trump said he's going to lower tariffs on coffee imports, which is a minor but symbolic easing. The House, also Treasury Secretary Bessent said that expect a lot more tariff news in the next couple of days. I mean, it's not me saying this. It's the U.S. Treasury Secretary. So if he says that, then we expect more news. It's a foregone conclusion. We're going to get more of it. Donald Trump started the kick things off this morning with saying that there's going to be lower tariffs on coffee imports. All right. We'll kind of skip the rest of that because it's not really a huge impact on the market yet. In terms of the shutdown, the House is expected to pass a funding bill, all right, to end the shutdown and reopen the government until the end of January 30, at which point we may kind of hit another stalemate again. I don't know how far it's going to be, but we're on the 46th day or something, 44th day, the longest ever government shutdown. And so come the end of January, hopefully it's not going to be another 44 days. All right. But it looks like things are getting a lot more probable for the government reopening into the end of January. And there is, in fact, going to be a House vote on the bill to end shutdown this Wednesday, today, around 7 p.m. Eastern time. So if the House approves it, it goes to Donald Trump for signature. The government could be reopened as early as tomorrow. All right, which would put quite a bit of liquidity that's been on the sidelines into the economy and into the market. So we could see a rally or a reignition of the rally to the upside, given that we don't have any other factors to weigh it down. All right. Energy, equity and sectors are moving. Europe rallies for a third day. U.S. futures are higher as well, with tech leading the recovery. Watch NVIDIA and Apple. They're in focus today for the early move. All right, and then that brings us to the two things I want to talk to you about today. And then also I'm going to turn around and do the charting for you and set up the place where I believe would be a good opportunity to try some trades today. All right. CPI. So the CPI report has been Consumer Price Index. It's a government data report, and it's been delayed again. It was due today, this morning. All right, it's been delayed due to the government shutdown, and we don't know when we're going to get the next CPI. It may not be this for this month. It may not be delayed. It might just be skipped, and we get the next one next month. But there is alternative data, and there is alternative ways to find CPI information, and usually traders turn to that alternative data if the primary one is delayed even by 1 day, because their models require CPI updates. The very important thing is to follow inflation. So according to these reports, which are done by Open Brand and Price Stat models, it's a private company, so they're not closed. They're in fact probably doing better than ever, more subscribers to the research. October inflation sharply decelerated. So it's still up, but it's slowed down. The curve's the increase is slowing down at a greater rate. So it's a deceleration, right? And it's led by the biggest drop in U.S. rents in 15 years. All right, so rent in the United States has fallen off a cliff in the month of October, and this is actually going to help inflation because over 1/3 of CPI, which is the Commodities Price Index, which is inflation gauge, which the Federal Reserve themselves watches for policy decisions and making any kind of moves on their Fed policy. All right, over 1/3 of that is tied to shelter costs. All right, over 1/3 of the CPI is tied to shelter costs, meaning that a deflation here could really kind of pull us into a lower inflationary environment for the next 12 to 18 months. which is significant. It's important. And Zillow, in addition to that, is now forecasting 2026 rent growth near 1% total, all right, which is very disinflationary as well into next year, not just 2025, but 2026. All right, so the takeaway here for all of this is lack or drop in housing and rental demand rather in the U.S. is driving inflation prices lower. And if this disinflation or declining inflation continues to unwind, Fed could face an environment where they have to cut. All right. And this rent inflation could very well become the anchor keeping CPI soft through all of next year. And then traders will start to price in deeper rate cuts if this trend persists. It's not at the stage yet where we have to worry or, oh my gosh, what is this, Isaiah? Who's this?
So we found like a little paper and we field something in it and we opened it and it was these pieces and they had a red spot.
Oh my gosh, that's a red spot. Oh my, you got one too, Xavier? Wow, let's see this one. Let me see this one. Ah! Watch your feet there, okay? I don't want you to trip.
I glow in the dark shock ball pamper.
Oh, it glows in the dark too? Let me see this. Ah!
You can see a little bit of it glowing, right?
It glows a little bit, yeah. Yeah, I'm going to finish this morning market update, and then we're going to have a full day together. Uh-oh, you're going to lock Isaiah in. All right, guys, my bad, but this is what we do this job for. Spend time with our beautiful kids and families. Hey, what is that key card on your arm? Oh, it's a play card. That's cool.
Okay, so you need to shine me on the light for a little bit.
And recharge you. Nice, buddy. I'm going to see it in 5 minutes, okay? I'm going to come outside and meet you guys in 5 minutes. And then I want to see how it glows in the dark. All right, so, inflation's going to stay soft through 2026. All right, and traders are now pricing in deeper rate cuts, which would be kind of supportive of an equity market rally. That I wanted to bring to your attention. And the last thing is Oracle is getting hit by a really big AI debt warning here. All right, Barclays Bank downgrades Oracle debt to sell. All right, they downgraded their entire debt to a sell rating. All right, and calls it the weak link in all of AI. Ouch. Barclays fires a shot at the AI situation that we've all kind of been talking about last couple of weeks and calls it even a bubble. All right. They say that the $300 billion open AI deal exposes massive funding gap and a 500% leverage. Hyperscaler debt surges to $160 billion this year. The markets are overwhelmed, and they say Oracle may run out of cash by late 2026 and faces a BBB credit rating risk. All right. They say dump bonds, buy CDS. Funding stress is just starting. This is Barclays. I don't know what motivated them to put that report out, but shots fired at Oracle, ticker symbol ORCL, and yet another crack kind of starting to show in this AI thing. I think we're due for a pullback. I think we're due for a retracement. I think it's too easy. Too many people are getting paid from this trade, and that's usually where the pain trade kind of starts to face downward with some sell stops, probably getting activated, shaking out some weak longs. All right, kind of like SoftBank. All right, SoftBank didn't scare people that have been in the AI positions for a long time. They scared the people that just got in because they got in late because they were uncertain to begin with. So if you're uncertain to begin with, it's not easy to shake your confidence. All right, let's turn around. Let's look at some levels real quick, and let's call it. It looks like Crazy Bones. Thank you, the German. Dave says, fantastic analysis from yesterday. You said first down, then up. Exactly how it went. Cheers. I got you, Dave. No problem, my brother. That's what I'm here for. It was one of those bullish days, right? Bullish days open weak and close strong. But let's see what we get in today's stuff. Good morning, Michael. Robert Trades. It's my mono brother. I don't know why. It's mono, brother. I don't know why. My stuff works everywhere else. It's something here on this channel. So, Robert, you're right, bro. Or not you. The guy that reported it was right. Let me see. Right now, I'll put it into stereo mode on the Apollo Twin. I'm using a UAD hardware interface. You know what that is, Robert. It might not matter to everybody, but I'm gonna fix it. Okay. Yeah, SoftBank sold 5.8 billion in Nvidia, but you know they kind of had to. They've been long that stock for decades, and they have an exit. All right, guys. I'm gonna give you this thing really quick, and then we're gonna be done. So you're seeing a lot of upside potential here in today's market. So you've already seen quite a bit of upside potential. You see one drive higher with the consolidation, second push with the pullback, third push with the pullback. We're now into the fourth one. So we're kind of recouping our losses very quickly here in the market. And today we're back above 6,900 on the overnight high. And we're getting into some areas where late October to, late to mid-October were resistance and consolidation. We're now running into that area. So I do think the bulls are in charge and leading the drive, but I think we're also running to some big resistance areas. So today, everyone's figured out that you just buy weakness into the day session. And for that reason, I think today it doesn't play out that way. All right, so here's really what we're looking for and at very quickly. The yesterday's open drove us high into the cash close. So about 33 points after a bit of weakness. We got the rally. We closed there. Overnight, we extended higher and we pulled back, but the overnight low was still above the open and close to the prior day cash close. That is indicative of a bullish extension and move into the session. So what I would really be looking for is like same sort of setup as yesterday, but it'll look different. I think early weakness to pull back into some of these 70s. And I think we get a rally, but this time it doesn't break the top. Be very careful of the 6,900. It's such a big, even, scary number that a lot of people will, I think, avoid it. And will want to settle trades before we get there. So 6,900, despite how ugly I drew it, is a number to watch for on the upside. I don't know if we break it off of this retest. So therefore, get paid before it. Target before 6,900. Go up to the mid-90s. And if we break this overnight low structure, then we could start looking for more of sell activity. But I'm still looking to be a buyer of pullbacks in today's session. Just less appetite than I would have had yesterday. All right, because now the trend is almost overextended. The way we were oversold here into these low 6,600s, I think we're kind of back into overbought territory and entering a period where we've consolidated for a long time previously, which we may just stick to a sideways pattern here. Plus, we got government reopening potentially. We got a lot of news. All right, we have tariff stuff that I know is coming down the pipeline from Secretary of Treasury. So we have a lot of potential action, and that's kind of the read today. I would start bullish, but I wouldn't stay bullish all day, and I would expect bullish extensions to not be that crazy. If we do get above 6,900 though, then bull mode is on, and we could start getting long. There probably won't be many pullbacks. It'll be one of those runaway days above 6,900. We extend. All right, that's what I got. I got to end it a little bit earlier today. Love you guys. Have a great rest of your session. I will see you again tomorrow. I'm actually not trading today. I'm going to spend some time with the kids, and I'm going to work to fix this audio. I think whoever was saying it was getting to my head, but then Robert, when he said it, Robert Trades Official, he knows what he's talking about tech-wise, especially vocal tech-wise. So I get it. It's in mono mode. So I'm going to fix it. Thank you guys. I love you all. Have a great rest of your day, and I will see you tomorrow. Trade careful, manage that risk, and trade like a trade pro. Thank you guys. Goodbye.